At the Berkshire Hathaway annual meeting, Warren Buffett did explain to the audience that he's entered into an arbitrage position on Activision. And as you can imagine, when markets opened up this morning, the shares surged over 3%. So of course, the Warren Buffett or Berkshire Hathaway copycat trade is on. However, there's more than one way to skin the cat. And I really want to explain to you guys 3 ways in which you can invest in this opportunity. And one of those ways, the return is over 50%. So that's what we're going to dive into in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel, where the mission here is to help over 1,000 people achieve financial independence much sooner. And before I start with this video, this is the first time on this channel where I got really specific on a type of investment and an investment opportunity. So I do want to reiterate that this is not financial advice for you to dive into this opportunity. Always talk to your financial advisor before making any investment. Do not listen to anybody on YouTube, including this guy. And it's probably better that you don't take financial advice from me, because the last thing you want to do is explain to your family that you lost money by listening to a YouTuber that looks like a weird, bearded Russell Peters lookalike. All right, enough with the waffling. Let's get right into it. So you can see here that Activision's shares did experience the Buffett bump. They were up 3.25% today, which of course is likely because Warren Buffett did explain his position in the company. But it's interesting, if you notice, by closer to the end of the day, the shares did continue to trickle upwards a little bit. So we'll see how they open tomorrow. And you can see here from this Barron's article that was released early this morning, they were saying that in early market trading, the shares were up. And of course, as you can see, when I showed you the close, the shares remained up. Buffett disclosed that he owns approximately 9.5% of Activision stock, or 74 million shares. Now, just FYI, Buffett may own 9.5% of the company right now, but if you paid close attention to what he said during the Berkshire Hathaway investors meeting, and I listened to all 6 hours of that meeting, he did say that he owns 9.5% right now. However, don't be surprised if that position ticks upwards as time goes on. So in other words, he's open to purchasing more. And of course, you guys may remember on the second paragraph that I've highlighted here, Microsoft has offered to buy Activision for about $69 billion or $95 per share, which was announced in January. And the transaction is expected to close next year by the end of June 2023. So there's 2 things to remember as we go into the analysis. The first one is that the deal is expected to close by June of 2023. However, that doesn't mean that it can't be delayed. And the second thing is that Microsoft is willing to pay $95 per share. Now, in the analysis of the arbitrage, that video that I did for you guys, which you can find on the channel, and I will link to it at the end of this video, I did show to you how Microsoft has twice the amount of money to purchase this company. The other thing is Activision has a lot of cash on their balance sheet, so it's not like Microsoft is ponying up all of that $95 per share. They're getting approximately $10 per share back. Okay, so moving on, let's get into that first opportunity. Now, guys, in the 20 years or so that I've been investing, I've only ever purchased a call option once. And a call option is the right to purchase a security at a specified price by a specified date, and you have to pay a premium for it. So you can see that I've chosen a call option that I'm going to show you guys. So here's the January 19, 2024 call option for Activision at a $60 strike price. So the right to purchase Activision shares for $60 a share. And today I have to pay a premium of $23 per share. So you can see if you combine those two, the total cost of this investment is effectively $83 per share. However, I don't have to put up the $60 per share until at least January 19th of 2024. So it's important to remember all of that as I get into the next spreadsheet. So here's my analysis for the call option for Activision. You can see that the exit price is at $95 per share, which is a Microsoft announced price. The option strike price, which is what I just showed to you, at $60 per share, is listed right there. The option premium, which is what I also just showed to you, of $23 per share, is listed right there. So you sum those two up, that's how you get to the $83 per share, which I call the available price. It's just the price that's available at which you can enter into this investment with. So the potential profit per share is effectively $12. Now, there's 2 ways to think about it. One is if this investment gets completed before January 19th, 2024, the only money that I put up was that $23 per share. So if the total return that I'm getting at the close of the investment is the $12 per share, well, the 12 divided by the 23 is just over 50%. So that's a 52% return. However, if this deal gets delayed and I get exercised on the call, or I choose to exercise the call, because why wouldn't I? So I choose to exercise the call, then I have to put in that additional $60. So I will have paid $60 plus the $23 premium. And then assuming that the deal takes another year from the time that I exercise it, the return that I actually generate is, you can see, 14.5%. Now, the math is a little bit fuzzy there because you sort of have to think about it in almost like two tranches, where the first tranche, you're getting that full 52% return, and the second tranche, you're getting that much lower annualized return. And some of you smart guys can figure that out. But effectively, what I'm trying to say is, if this deal closes in 2023, your return will be at least 52%. I mean, obviously annualized, it'll be higher than 52%, but let's just assume that the deal gets closed on January 19, 2024. Your return is 52%. If it gets delayed further, you still are effectively purchased into the investment opportunity, albeit you've purchased it a little bit higher than the current share price. But the reason why you did that is to get access to that leverage, because you think it's highly likely that the deal will get closed before January 19, 2024. But if I've confused you, just think of it from the perspective of, you have entered into the possibility of generating a huge return on this at the expense of, if there's a significant delay, you'll still make a return, it just won't be as high. And if the deal falls through and the shares start trading under $83 per share, you haven't lost as much money. You've lost $23 per share, where if this deal actually does fall through and you've purchased it at $78 per share, I wouldn't be surprised if the share price declines to around $50 a share. I don't know for sure, to be honest, but that is something that could presumably happen. Maybe you might lose a little bit less if you actually purchase the shares and then the share price decline. It's very presumable that the shares might just go down to like the 65 area. So you might have lost, 13 to $15 per share. So that is another possibility, but just something to think about. Call options effectively just give you access to leverage. So that's an investment that you can make. Now, moving on. If you didn't want to use call options and you're not familiar with them, you can use a long-dated cash secured put. These are the January 19, 2024 cash secured puts. Now, the only thing about cash secured puts is you're going to have to put the cash aside anyways. The only difference is you may not necessarily have the cash available today, but you absolutely should have the cash available tomorrow, just in case if you do get exercised and this deal doesn't go through. The premium that you're going to get is $17.50. So if you look at the model that the Patreons get access to, they have something here called the cash secured put analysis tool. And so what you can see here from the cash secured put analysis tool is that if this deal takes until January 19, 2024 to close, the annualized return that you generate on this is actually only 11.9%. So just be aware of that. However, as I've pointed out below, the sooner the deal closes, the closer to the simple put yield of 20.5% your return will be. But I'm not a huge fan of the cash secured put premium in this situation. So I'm personally out. I don't think I would utilize this opportunity. And then, of course, the final opportunity that you can do, which is effectively what Warren Buffett has done. So maybe if you just want to stick to the smart people in the room, follow what Warren Buffett is doing. If this is an opportunity that you independently decide is for you, well, you can just purchase the shares. So $95 divided by the current share price of 78.06 gives you 21.7% in terms of simple rate of return. However, we're currently in May. And if the deal closes in June, you'll earn just under that on an annualized basis. So you might earn like 19 or 18%. If somebody wants to do the calculation in the comments below, by all means. But if the deal gets delayed further out, remember your annualized yield will continue to come down. So I always like to think about these types of investments, not just in terms of simple yield, but also annualized yield. So I understand that I may have complicated for some of you, but it's just sort of how you should be thinking about these things in terms of deploying capital. Because at the end of the day, you can be using this capital and deploy it in other areas and generate higher rates of return. So just something to think about. And of course, if you're not comfortable with the Activision opportunity, I don't blame you. There is risk here, right? The reason why Activision is not trading at $95 per share today is because there is some regulatory risk. And there is historical precedent with technology companies where these deals get rejected. And so there's a very real possibility that this Activision deal gets rejected. I personally Don't think it will, but I might be wrong. I'm not the smartest guy in the world. That being said, there are some other opportunities that you can look at. So you can see here from the spreadsheet that all the Patreons get access to, there's companies that we're following, and you can see that there's 7 companies where the share price as a percentage of its intrinsic value is under 50%. Those are the ones that are highlighted green on the far right. And then there's about 14 companies, those are the ones highlighted in orange there, where the share price as a percentage of its intrinsic value is under 75%. So there's quite a few opportunities here available to investors that are interested in just straight up just purchasing stocks and owning them. And you guys already know some of the ones that I have covered on this channel, which I have unhighlighted here. So you can see there's Alibaba, which you guys already know. Share price is $100 per share and its intrinsic value somewhere in that $300 per share range. There's Foot Locker that I talked about, where the share price is $29 per share or $30 per share, and the intrinsic value is approximately $60 per share. There's Zillow Group that I discussed. It's trading at 52% of its intrinsic value. There's Alphabet, which almost everyone loves. Its share price as a percentage of intrinsic value is 60%. This is one that I'm really watching, and as it comes down further, I'm looking to invest in it. However, I just haven't achieved a price point that I'm comfortable with yet, but I will be looking at cash secured puts as a way to get in at the price that I want to. But I might just be wishfully thinking right now. I might never get this opportunity, but I really hope I do. And then, of course, the last one, you have Meta Platforms or Facebook. Here's one where the share price is $200 per share and its intrinsic value is $300 per share. So it's not a bad price to buy Facebook at. There's a lot of you that got mad at me when I said that I want to buy Facebook for $150 or less. And you guys are like, that's wishful thinking. It'll never happen. You're probably right. But I am allowed to be picky with my money. And so if I don't want to buy Facebook for over $150 per share, I have the right to not buy it. And so will I be wrong in the long term? Very well could be, but I'd rather make the mistake of omission than the mistake of commission. And there's been many, many, many times where I've wanted to buy a security and I said, hey, you know what? I don't think this thing will ever drop further, so I might as well just buy it now. And then I've watched it drop further. The best example, Alibaba. So I'll be very picky with the positions that I'm looking to take. Now, I came back and I recorded this afterwards because as I was editing it, I realized I didn't make this Excel spreadsheet available. If you want access to this spreadsheet where I'm calculating the return for the call options, I'm going to make it available to the Patreons at the $5 per share level. Now, guys, if you're not a part of the Patreon, there's a lot of interesting information that is provided to the Patreons. And as I always say, everything is available at that $5 per month level. And if you decide to subscribe and it's not for you, no problem. You can cancel within the first month and I'll fully refund all of your money. In fact, I think Patreon does it automatically, so there's no risk to you. But also, guys, I did a complete walkthrough of the risks associated with the Activision investment or arbitrage type opportunity. And I don't even want to call it an arbitrage opportunity. It's more just like how likely is this transaction going to go through? And you can get to that full analysis right here.